Good morning, everybody, and welcome to today's SME workshop that we've dubbed Powering SMEs Beyond COVID-19. My name is Maxwell Okello. I'm the Chief Executive of the American Chamber of Commerce. Before we get into the program, I want to just very quickly run you through what to expect today. So if we could move on to the agenda. So we have a very simple program this morning. It's in three parts. After my opening remarks, I will moderate an opening panel that will feature Invest in Africa, B-Lab, Standard Chartered Bank, and Enreal Limited. That should go for about 30 or 35 minutes, after which we will get into the workshop proper, which is a part that is labeled on your screen as part 2. And that will have two parts to it. The first part will be focusing on financial tools, options, and processes that will be facilitated by Standard Chartered Bank. And the second part will focus on opportunity development for business growth that will be facilitated by Enreal Limited. After which we'll have the third part, which will focus on governance and structure, especially in relation to creating impact. That will include a run through what we call the B assessment impact tool that will be facilitated by B-Lab. After which we should do a wrap up and close sometime just before 11 a.m. So that's the simple program this morning. And with that, I want to just make a few opening remarks before we dive into the opening panel. So small and medium enterprises, or SMEs as we call them, play a major role in most economies, accounting for the majority of businesses and are a big source of jobs and livelihoods for millions of households. Data from the Kenya National Bureau of Statistics shows that SMEs contribute about 98% of all businesses in Kenya, constitute about 98% of all businesses in Kenya, contributing approximately 40% of the GDP, with the majority falling in the informal sector and employing about 14.9 million Kenyans. Traditionally, SMEs have faced significant challenges when it comes to access to finance, access to opportunities for business growth, and weak internal governance and institutional structures, which have hindered or continue to hinder their growth. As with other sectors, the pandemic has not spared SMEs, disrupting their businesses, shifting demand and supply, and impacting consumer spending power. The Central Bank of Kenya has projected that up to 70% of SMEs may run out of, or may go out of business if this situation persists. However, we don't think that it's all doom and gloom, and that's why we put together this workshop this morning, to provide valuable information and tools for your businesses to not only weather the current storm, but to power your businesses and to your businesses beyond this COVID situation to rebound and grow into the future. Specifically, we will be delving into three key areas: finance and what options exist within that, opportunity development, how you can build your pipeline and create opportunities for growth. Then lastly, we're going to focus on governance and how you can structure yourself so that you can actually create impact. So before we begin, a few housekeeping issues. You'll notice that your video and audio are muted or off. This will remain that way until we get on to Q&A, at which point we may call on some of you to actually ask your questions directly to the panel and those who will be facilitating the workshops. We invite you, as the session progresses, to type your questions in the Q&A tab. In the Q&A tab, not the chat tab, excuse me for that, the Q&A tab, so that you're able to track your questions and be able to field your questions to the panelists or the facilitators when we get to the workshop. So with those few remarks, and in the interest of time, I want to just very quickly switch gears and get into the part one of our forum, which is the opening panel. And we're now going to, I'm going to invite Ngwing. We have with us Ngwing Kimani, who's the Executive Director of BLAB East Africa. We have with us Wangechi Muriuki, who's the Country Director, Invest in Africa. We have with us Kombo, the Head of Business Banking, Standard Chartered Bank, and Geoffrey Otieno, who's the Managing Director of Enreal Limited. So welcome, and I want us to begin by just giving you a couple of minutes, each one of you, to just give your, introduce yourselves properly, introduce your organizations, and give your opening remarks. And I'll start with you, Wangechi.
All right. Good morning, everybody. Thank you all for turning up and pleased to meet you. My name is Wangechi Muriuki. I work with Invest in Africa. We are an organization that is acting as a catalyst for SME growth and competitiveness, a non-profit that is Pan-African, and we support small and medium enterprises to scale up sufficiently by improving access to markets, skills, and finance. Thank you.
Thank you, Wangechi. Ngwing?
Good morning, everyone. Thank you for joining us this morning. Like Maxwell said, my name is Ngwing Kimani. I'm the Executive Director of BLAB East Africa. BLAB is a not-for-profit organization that supports, promotes, and certifies companies that use their business as a force for good. We believe in a better way of doing business, and we've developed some free tools for entrepreneurs and businesses, regardless of size and industry, to measure their impact and set goals for improvement for their businesses. Thank you.
Okay, thank you. Bernard?
Good morning, everyone. My name is Bernard Kombo from Standard Chartered Bank. I'm in charge of business banking. As a bank, our focus is on supporting SMEs for their development, for their growth, by providing solutions that necessitate them to prosper in the areas they are operating in. We are currently the only international bank in the local market, supporting all sectors of the economy, and we have been here for over 100 years. Thank you.
Fantastic. Thank you. And last but certainly not least, Geoffrey.
Yeah, thanks a lot, Maxwell. Good morning, everyone, and glad to be here. Geoffrey Otieno, the Managing Director of Enreal Limited. Enreal Limited is a strategy and business transformation firm where we specialize in helping organizations, especially the SMEs, scale to the next level or provide opportunities that help them to scale to the next level. Thank you.
Okay, thank you. Thank you very much. And I'll start off with you, Wangechi. I think, Invest in Africa, like you said, focuses on transforming SMEs and enhancing their competitiveness, creating opportunities and jobs. We'll just break this down for us so that we can understand that better.
All right. Yeah. Thank you, Maxwell. So, like I just mentioned, we are firmly focused on supporting small and medium enterprises in recognition of the important role that they play on our economy in Kenya and also in Africa. And as Maxwell alluded, so Invest in Africa, first of all, is enabling trade between SMEs and large organizations. These are the multinationals and the large local organizations. So we create an enabling ecosystem for these SMEs by coordinating the desire of private sector to source locally from small and medium enterprises. And how we do this is by bridging the gap. There's a huge gap between the large organizations and SMEs on the ground. So the first thing that we do is that we work with anchor partners, organizations, large organizations, Safaricom, Talo, Bidco, on offtake agreements to provide ready markets, guaranteed markets for SME groups who supply products, but they lack markets or they lack a coordinated access to it. So we register these businesses, we reach out, we validate them on our platform, We run a digital platform called biashara.now. So we get their details from there. You know, we vet them, we check, are they registered? Are they tax compliant? Are they, you know, real businesses, or are they briefcase, you know, companies? And therefore we list them as validated on our digital platform so that they can supply to the anchor partner. And then the second thing that we do is that we also bridge the gap on skills. You know, we are aware that, you know, they may not have all the skills that are required. So we provide knowledge transfer, training programs, mentorship, to provide them with the required skills that will ensure that they can deliver to the quality and at a competitive price to the anchor partner. And then the third way in which we do this practically is that we partner with financial institutions, banks, impact investors, to be able to bridge the most painful challenge, which is access to finance. So we run a few programs there, but the main aim is to ensure that they can scale sufficiently by securing financing lines or guarantees to supply to the demand that you know, that has been created through IIA's agreement with the anchor partner. So those are the three main areas: access to markets, access to skills, access to finance. So we deliver this through our digital platform. And to date, we've been able to link, we're working with over 3,000 small and medium enterprises across Kenya. We've been able to link them to opportunities worth over $3 million that have been won for the last 2.5 years. And we've been able to create more than 30,000 new jobs. We are proud, you know, we are still very far. We are aiming at about 1 million jobs, new jobs for Kenyans by 2025. And we've been able to link them to finance worth $5.5 billion. And I think we have trained more than 1,500 entrepreneurs.
Okay.
Thank you.
That's great, Wangechi. And is that, so the 5.5, you said $5.5 million, is that Kenya only?
Yes, that's Kenya only.
Okay, and the 3,000 SMEs, Kenya or within the various markets?
3,000 SMEs are in Kenya. Within the various markets, we are more than 5,000. We have presence in 6 countries in Africa, and Kenya is just one of them. We are present in West Africa and South Africa.
Okay, well, that's great. That's great.
Thank you.
And talking about finance, let me bring in Bernard into this conversation. You know, you've talked about Standard Chartered, you know, being a bank that is supporting, you know, business, supporting SMEs. And as we know, the financial sector, especially banks, have really been, or are perceived, let me put it that way, to be insensitive towards, you know, the needs of small businesses. Yet, as we've said, you know, these businesses are really the drivers of our economy. What is Standchart's play in this space? And what is different? Why Standchart? Why would an SME come to Standchart and, you know, choose you over any of the other banks?
Thank you, Maxwell. As in your opening statement, you mentioned that SMEs constitute 98% of businesses in Kenya. They provide over 80% of the workforce and contribute over 40% of our gross domestic product. That shows how important SME is play a pivotal role to the growth of the economy. As a bank, we have noted this and we have put in place several solutions that support SMEs. For example, during this period, we have arranged a series of webinars to be able to train our SMEs on what's happening in the world economy, not only Kenya, but internationally. We have trained them on how to utilize the excess cash they have. We have several investment opportunities for SMEs because when you have unutilized cash, most of them tend to invest in put in investments that are not income generating. And as a bank, we have noted that and we have put in place solutions that are able to convert that money into income generating. We have also supported our SMEs by providing with them reprieve on the loans. Now, you realize that during this period, most SMEs are struggling to meet their obligations. And as a bank, we made a conscious decision to be able to support them, either for those who want to expand their business, they have seen opportunities, they want to expand their businesses, we have given them money to do that. For those who are struggling to meet their obligations, we have given them a reprieve. And reprieve has ranged from 1 month all the way to 12 months to 24 months, depending on the needs, on needs of the client. What differentiates Standard Chartered from other banks in the market is our investment in digital. As a bank, we made a strategic decision to invest in digital. Why digital? Digital is the future. And digital is what's going to drive not only Kenyan economy, but the world economy. And as you have rightly seen, during this pandemic, digital is the way to go. Using our digital platform, our clients, and specifically SMEs, they're able to manage their cash flows, that's cash management solutions, both payments and collections. They're able to interact with the bank through our treasury on the online platform. So you're able to buy foreign exchange, you're able to sell using the platform without necessarily visiting the branch. You are able to request for financing, be it bonds on guarantees, be it letters of credit, be it discounting of invoices. You're able to do it from the comfort of your offices. We are the first bank to integrate with the Kenya Revenue Authority, and our clients are able to pay taxes 24/7 from the comfort of their seat. This platform has enabled clients, especially SMEs, whenever they take a break, you know that most of them will have to sign so many checks to ensure that the operations goes. Using our digital platform, you don't require that. You can be able to access it anywhere in the world using any gadget. That's how important the platform is. Number two is we made a conscious decision as a bank to support our businesses sustainably. We invest in those businesses that contribute to the future growth of the economy, that help to maintain the environment. So we'll not invest in those businesses that destroy the environment. Number three is our offering is different from the local market by virtue of providing a wealth management solution that both covers the local market and the international market. Our SMEs are able to tap into the benefits that are accruing from the world market to help them grow their business locally. So I'll give an example. So for example, we have SMEs who want to invest in the world market, either in bonds or in shares in other jurisdictions. They're able to do it from using our platform and from the comfort of their seat. So what I'll say is what differentiates us from the other banks is the digital investment that we have put in place, our sustainable investment to support the economy, because we understand that we have to ensure that the future generations will benefit from the investments that we're making now. Thank you, Maxwell.
Thank you very much for that, Bernard. I'll turn over to Ngwing. And I'm sure that the SMEs represented here are for-profit business mostly, and may not be so much focused on the softer side of enterprise, so to speak. Just talk to us about BLAB, and especially your mantra, the reference of balancing profit, purpose with profit. Why is this important, and how does it contribute to building a better business?
Thanks, Maxwell. As you can tell from your statistics that you shared, businesses, especially SMEs, are the fuel to the economy. Can you hear me? I'm getting a message that my internet is unstable.
Well, we can hear you.
Am I clear? Okay. Yeah. So at BLAB, it's not really about balancing purpose and profit. It's more of having purpose in your business as you're pursuing profit. So you can think about it as conscious business, where you as an entrepreneur or as a business leader, you have an intention to make a profit, but you are conscious of the fact that there are other stakeholders represented in your operations and in your output. And so you can definitely make a profit without shortchanging these stakeholders. Workers and customers are really the determining factor of your business. I mean, Bernard has talked a lot about the tools that they have put in place to make sure that the interaction of the business people and their operations and their customers is digitalized, right? So you know that throughout your business, you're going to be interacting with different stakeholders. And when you think about the people who are working for you, do they know why you are in business? Do they know the mission of your business? And you realize that once your workers know what you stand for, you're more likely to get engaged workers and trustworthy workers. So what we are saying at B-Lab is that we are in a different era. Now is the time to think about business holistically. This is not just about the bottom line. It's everyone and everything that you touch in your journey to get to profit. And I can guarantee you that businesses do make a profit when all their stakeholders benefit.
Yeah, that is indeed. That broad stakeholder view is really a powerful engine when it comes to businesses. And I think small businesses should be encouraged to take a holistic view when it comes to sustainability of their businesses, as you've explained, Ngwing. So let me bring in Geoffrey. And Geoffrey, we know that you've done quite a bit of work with SMEs and continue to do quite a bit of work with SMEs at different levels. From your experience, what are some of the, what would you say are the biggest levers that make some SMEs thrive while others struggle? And what are some insights that we can glean from that?
Okay, thank you very much, Max. And I was actually listening to my friend Wangechi, and she was mentioning part of them, and I'll summarize it in about 8 different areas. At Enreal, we've dealt with over 400 SMEs across 3 continents. We've come to realize there are certain things that make some SMEs thrive, while even during times that are tough like now, they still have a game plan to navigate the pandemic. And the first thing that makes the difference between one SME and another is the mindset of the leadership. The mindset of the leadership, you'll find the ones that are thriving, there's a conscious winning mindset, and they are always looking for solutions to whatever comes towards them or whatever they face. And you find that anywhere, from our clients in India to our clients in Nigeria or Ghana or even here in Kenya. It's kind of the same type of mindset. And the second one is they all have a plan. It might not be elaborate and well written, but the team understands the plan. There's a plan and they are following a plan. And this is very critical, because if your team understands the plan, then everybody moves in the same direction. If the plan is only in the head of the founder or the minds of the CEO, then you find at some point people start taking off in different directions and it doesn't move very well. The third thing is they know how to manage the finance. And I was enjoying what Bernard was talking about. And it was interesting to hear him say there are SMEs with unutilized cash at this particular moment. But on a lighter note, I'm sure many SMEs wish they have they had unutilized cash at this particular moment. But they have a plan for the finance, and they put together a proper plan on how to even generate the finance. They would be linked with investors of various kinds, whether it's private equity or venture capitalists or angel investors and the like. And then the fourth thing that these thriving SMEs have is the right team. Selection process of your team is very, very critical. You need to know who's in your team and what are they bringing to the table and how do they fit in the bigger scheme of things. They also have quite a number of them have policies and procedures. They have ways they do things that are well laid out, and they follow those to make sure they don't repeat the same mistakes over and over. And when they combine this with the knowledge of what they truly do, which is their core product, that becomes a very powerful force if you take the leadership mindset that we mentioned earlier. Then one thing that we found, especially with the CEOs of thriving firms, is they all have mentors. They all have mentors, irrespective of how big the corporation is. You'll always find the CEO has somebody he can call and say, this is what I'm going through and I need help and I need to think about this. And that's a key element, irrespective of whichever country they operate from. And then to follow up on Ngwing's comment, majority of them also have a desire for impact. There's a latent desire for impact, and it's not necessarily the key driving factor, but you'll find that keeps them going as they execute their plan, because they have something else they want to make sure is also achieved as a result of the success of the organization. So these are the 8 things I would summarize as being very common amongst companies that are thriving.
Yeah, okay, that's great. That's great, and thank you for that elaboration. I'll come back to Wangechi, and I can see some questions already coming in. Perhaps I can address this question to you, Wangechi. So Anthony Roberts is asking, the Africa Continental Free Trade Agreement is bound to provide the second biggest market after the EU. And the question is, how is Invest in Africa positioning itself to ensure that SMEs in Kenya become aware of opportunities that arise from this trade agreement?
Great. Thank you, Anthony. Yes, we are aware of the huge opportunity ahead for SMEs. And the role that we are playing right there is to prepare businesses to help them to start building capacity or to be able to understand how they can play within an international market. So we do have an export readiness program that is in the pipeline, and we're also starting to deliver, aspects of that on our ongoing program, which I think I will just talk about so that I can encourage anyone who's interested in scaling and surviving during this particular phase. We are running a program called the COVID-19 SME Survival Toolkit, which is a series of virtual programs with aspects of masterclasses, peer-to-peer sessions, and a repository of practical guides. This is to enable businesses to address their immediate challenges right now, where there is technical support around it in very specific sectors. And we are helping these businesses to develop relationships with lenders, with investors, like now banks like Standard Chartered, as Mr. Kombo really alluded. So we are proactively helping SMEs, but it starts with where you are now. You have to succeed where you are before you can even succeed outside the country. And in a short while, we'll also be running those webinars to create awareness. And there's a partnership, there's a global partnership that Invest in Africa also has with Standard Chartered, and we will be running a series of webinars. So what I would encourage you is to just be a part of the network. I'll be telling you how you can join so that you can participate in our programs, which are free. So, and it's just the help and the support we're extending to you as a business person.
All right, thank you, Wangechi. Let me turn it over to Bernard. And Bernard, what are some practical steps? I know this will probably be covered during the workshop proper. What are some practical steps that SMEs can take to leverage some of the tools that you offer at StanChat?
Thank you, Maxwell. One is starting a relationship with the bank. So for you to be able to benefit on what the bank then is able to offer, you have to start a relationship with the bank. And the bank has a suite of products specifically suited for SMEs. And these ranges from assisting you in your collections, assisting you in your payments, assisting you in investments, and financing. And financing will be both CapEx and working capital, advisory services, among others. What I'll advise businesses, the most important is proper bookkeeping. So you realize most SMEs, they don't keep their books quite well. And when it comes to supporting them in financing, most the bank then will struggle to understand what then, how much then can you support the business. Number two is use the bank as a channel of both collection and payment. I know most businesses do collect cash and they want to make payment in cash. But as you use a bank, the bank as a channel of collections, in most occasions, whenever you are then coming for support, especially for SMEs and specifically to Standard Chartered, will not ask you many requirements, because the bank will be able to show that this client, this the kind of transaction that he does, this is how much then he qualifies for financing. We have also advisory services. And these advisory services, as my panelist mentioned earlier, is able to help how do you transition from the original owner of the business, the matriarch, to the next generation of the business. We're able to advise you in which sectors do we see opportunities for growth. We're able then to link you to other SMEs globally by the sheer size of our business. Remember, we are in 16 markets in Africa, and we are in Asia, Middle East, which are predominantly SME areas. We have a vast knowledge on what's happening in this market that we're able then to transfer the same knowledge to our SMEs. So the best, most important thing that the SMEs need to have to leverage on the support that comes from Standard Chartered Bank is maintaining good books and also channeling their businesses or transactions through the bank.
All right. Okay. Thank you, Bernard. Ngwing, just real quick, just give us a high-level view of how BLAB supports SMEs with the process that you talked about and what you do at BLAB.
So how we support SMEs is similar to what Invest in Africa does, in that we have these free tools. One of them is called the B Impact Assessment Tool that takes you through several questions, helping you think through your processes. And these are more geared towards your impact and your mission. And so we are able to sit down with you and take you through the impact assessment test if you need that help. Oftentimes we do conduct workshops. This year we've had to do them online, but we have several workshops. We can do them through our partners, or we can reach out to companies directly. If a company wants to know more about the B Impact Assessment tool, we are able to take them through.
All right, thank you, Ngwing.
Later on in the workshop, we'll be covering the depth of the tool, so I don't want to talk much about it now.
Absolutely, absolutely. And then finally with you, Geoffrey, just give us a snippet of what opportunity development is all about, and why this is a strategic, an important strategic process for SMEs.
Great, and I'll do a presentation much later on how to tap into opportunities and how to navigate this pandemic, whether you are an SME that has a turnover of 5 million and below, or you're one that is doing 100 million plus, same process. But when you look at the opportunity development, and I'll talk a little bit more about it later, even the two panelists, Wangechi and Bernard, have already offered opportunities to the SMEs just in the discussions. But the SMEs need to evaluate those opportunities in a certain manner and make a conscious decision. For instance, Bernard was very clear on what is required. So there are very many opportunities currently, and I'll talk about a group that we formed when the pandemic started and managed to help the members of the group navigate the pandemic. And we are seeing the results. These are SMEs ranging from less than 5 million Kenya shillings turnover per annum to 100 million plus. And we are seeing very great results with that. And I'll share some of the opportunities in my presentation.
Okay, thank you. Thank you. I think I'll give an opportunity to each one of you to just give your closing remarks as we conclude this opening panel before we get into the workshop program. Wangechi, any final remarks?
All right, thank you very much, Maxwell. My final remarks to the SMEs that are attending this workshop, first of all, is to really encourage you and to let you know that you have partners that are willing to hold your hand, to work with you, to listen to you and support you. And Invest in Africa is one of them. I'll encourage you to join our platform. It's www.biashara.now.com. I'll be posting the details on the chat, and I'll also share them with AmCham. It's absolutely free. All you need is to be a registered business, and then you'll follow this 5-step process to become validated. There are a few requirements. It's a questionnaire, which also helps to, for you to be pre-qualified by our partners, and then you can start your journey with us. We are running our COVID-19 Survival Toolkit program. This is the business advisory and support program, which I said is a series of webinars, peer-to-peer coaching, access to mentors who can support your business. And we are looking for about 100 SMEs that can access finance immediately through a program that is sponsored by MasterCard. And so I'll just encourage you to step in. If you need to rethink your business, you want to repurpose, you are stranded, or you have even closed shop, talk to me and talk to us. We are ready to listen, and we'll help you because we've created an ecosystem, and it's all about driving a very big agenda for the country. You are important, and we want to create jobs. We can't do it without you. So thank you very much, and I wish you well. I'll be interacting with you in the course of the workshop. So thank you.
Thank you, Wangechi. Bernard.
Thank you, Maxwell. My final comment is Standard Chartered is here for all our SMEs. We bank virtually all SMEs, irrespective of your size. Take advantage of our offering, both on advisory services, both on financing, operating the account. Take advantage of our digital solutions. Take advantage of our footprint in Africa and the Middle East and Asia. Take advantage of our branch network in the country to be able to support you. And there's a misconception that Standard Chartered looks at big companies. That's not true. Standard Chartered looks at all. And as we speak now, we have over 10,000 SMEs that we support. Our focus is to grow that platform, to increase the number of SMEs. We'll continue investing in digital to help the SMEs to focus on their businesses. And this digital that we're going to invest in will be able to support you in your borrowing needs, will be able to support you in your cash management solutions. We have put in place solutions for those customers who are cash heavy. We have transferred banks into their premises. So you don't have to visit the bank. The bank comes into your premises, and you're able to do your banking from the comfort of your business operations. So I welcome you to Standard Chartered Bank. Reach out to us. we are open, we're able to support you, we're able to provide advisory services to you, we're able to provide financial support to you to enable you grow to the next level. Our happiness is when we see the SMEs that we are supporting growing to the next level.
Indeed. Thank you very much. It's really about growth, and I want to give Ngwing a couple of minutes as well to just give some closing remarks before we move on to Geoffrey and move on to the workshop.
Okay, so briefly, I would just like to encourage us to think about purpose in our business. Purpose-filled businesses build trust, and they are long-lasting businesses. The Harvard Business School published an article recently about longevity in purpose-filled businesses, and they found that out of the businesses in the world who have been around for 300 plus years, 40% of them are in Japan. And that's because these businesses are conscious businesses. I will post the article in the chat for people to reference. So I'm encouraging you to go online and take our B Impact Assessment tool. We'll be talking about it later. I'll also post the link in the chat room. Thanks.
Thank you, Ngwing. Geoffrey?
Yeah, mine would be to ask the SMEs to take this opportunity and scale using the resources that they have today. Especially in this panel, we have people who are willing to help the SMEs. All the 4 panelists are here for purposes of helping the SMEs. And if you have any queries, you can come to us and we'll be able to guide you as to how to tap into some of those SMEs. I don't know where the listeners are from, but we do have offices here in Nairobi, and we have offices in Abidjan and a satellite office in San Francisco. And so you can reach out and get to learn how you can scale and tap into opportunities as you go along. Yeah.
Okay, thank you. Thank you very much, Wangechi. Thank you, Ngwing. Thank you, Bernard. And thank you, Geoffrey, for sharing your insights and edifying us this morning. In the interest of time, I want us to move into the workshop, which is really why the majority of you are here. And we'll start off first with the finance component. And for this, I want to bring in Javid, who's going to lead this segment, the next 30 or so minutes, together with his colleague, Eva. So over to you, Javid.
Thank you very much, and a very good morning to all of you. And thanks for coming and joining us in this morning session. Just let me introduce myself. I work for Standard Chartered Bank as the country credit head for Kenya, and also I look after East Africa. Now, you know, it is always an interesting topic once it comes to SME. I think all our panelists, they talked about the penetration of SME. They talked about how important SMEs are, especially for a country like us. We are a developing country. Almost more than 90% of our activities are centered towards SME. Now, I just want to start with, before I go into the credit tools and others, I just want to start with some numbers. In Kenya, there are about 7.5 million SMEs. Of that, if we look at really who they are, what do they do, you can only look at them if you have a valid trade license, if you really post yourself in the territory of the government or the net of the government by registering, by paying tax. The problem is, once we look at the second indicator, which is the registration process, less than 20% of the SMEs, unfortunately, are only registered. So you don't really know that, the rest of more than 80% of the SMEs, what do they do? Not that you don't know entirely, but you have an idea of overall what they're doing. But in detail, it's very difficult for anybody to go in detail of what you're doing. So that's number one number. Number two is this less than 20% of the SMEs are actually contributing 90% of the value addition to the countries. So you can imagine a correlationship between you being registered and non-registered. Less than 20% contributing 90% of the value addition, and rest 80% are contributing less than 10% of the value addition. That's point number one to understand. And I'll tell you why I'm telling these numbers. Number two, about nearly 50%, the statistics say that about 46, 47% of the SMEs does not have the luxury to see the next birthday or the second birthday. That means they perish within a year time or less than a year time. Now imagine you set up your business, you probably left a job, you probably started something, investing money with a high hope that you will change your life, you will change the life for your next generation. But almost half of you are perishing within a year time. What a huge loss to the economy or to the SMEs that are trying to grow. And the third point I'd like to highlight is actually who these SMEs are. There are definitions of SMEs where it goes by the turnover. It starts with $500,000 shilling yearly turnover to 10 million to 100 million to describe the macro, medium, and small enterprises. But interesting thing is the small enterprises, they are the larger pie of the overall market. Now again, I'll come back and link it back to the discussion of why it is important. So to summarize that first topic of the discussion, who the SMEs are, you belong to this segment of the turnover, your employee size, so on and so forth. They describe it less than 10, then 10 to 50, and then more than 50, and so on and so forth. And the second aspect is whether you're registered and non-registered. Now, if you look at why these are important, why have I started with these numbers? It's important because once you come to the bank, banks are not a financial institution who can really charge you a very high amount of interest. Bank operate within a very, very smallest margin operating financial institutions. On an average, in Kenya now, the interest rate is capped. Now it has withdrawn, but on an average, banks are charging in the range of 13, 14, or even 12%. Now imagine that you acquire your deposit from the customers at a rate of 6, 7% or whatever, depending on the banks, their way of collecting the deposit. But average cost of capital would be anywhere in between 6 to 7%. Then you have an operating cost. And then you end up looking at how much money you're making. And then you have an LI on that, which is the loss of that portfolio. It's very important on this discussion because what SMEs are doing today, they are going to loan sharks, they're going to the macro finance companies. I'm not saying it is bad, but there is no option for you other than going to these high cost lenders. And that high cost, once I say, it ranges, and we have the statistics, as low as 30, 40% to as high as 160, 170%. Because some of these you pay daily interest, some of these you pay daily payback. Now, why do you have to go back to those high cost lenders? Answer is simple. As I said, that 46% or 47% SMEs don't get to see the second birthday. That means if you die and if you borrow from any institution, the loss rate is more than 50%. So for a business institution, you have to really look at, how you can safeguard the depositors' money to give it back to the borrowers who can operate within that risk appetite. Now, to plug in another point is, as I said earlier, 20% or less than 20% of the businesses which are registered contribute 90% of the total value addition. So for any SME, my first approach is be structured. Try to register your company with the Board of Investment or the registration process, whatever is the case may be. Then put yourself into the tax bracket. Remember, today, any giant corporates, they have not started as a giant corporates or a multinational or regional big player. All of them, you go back, maybe a decade back, 2 decades back, they started with SME. And then why they have succeeded, if you do the case study, they have started well. They did not try to shy away from registering their business. They did not try to shy away from getting them into the tax bracket, because it's important for the government to support the infrastructure development of SMEs and any other businesses. The only way it can happen is to put yourself into those structural things. Now, if you link back that whether you want to pay 100%, 80%, or 150% interest and try to be outside the scope of registration process, or you want to be within the registration process, you want to be within the structure and then contribute more than 90% from a smaller group. Now think about if that less than 20% move to 80%, look at the value addition. It could be 4-5 fold of what we are doing. Now that's one part of it. Now why it is important for the bank? As a bank, we look at credit history of the customer. We use scorecard, we use various tools to see that whether a customer is credit worthy or not. And as I mentioned at the beginning of my discussion, that bank operate with a very, very thin margin. So I need to really look for a segment which can operate within a specific loss rate, which we call our risk appetite framework. For any bank, you name it, every bank has got their risk appetite framework. So if we are not part of the SME, we are not part of more than 90% of the economy. That is either not an option for the bank. As our colleague, Mr. Kombo and Wangechi and others, they said very, very articulately, saying that the banks are there to support the SMEs. Banks have to be there to support the SMEs. Otherwise, you can't grow yourself without growing the SMEs. So my request number one is for you to come to the banking arena and use the facilities or the platform of the bank. It's not only credit, but also your transactional need, but also your FX need, also your smoothing your business through using digital platform and all these things. You've got to be within the bank. My colleague Kombo has shared that we have got 10,000 SMEs. We are looking at hundreds and thousands of SMEs to be onboarded within our system, and we are ready to do it. And we are putting investment to put the structure right so that the SMEs like you can actually apply online, get the loan digitally, use your cell phone, to get the job done. Now, my third point is, again, I link back to the second point is, what do we look for? So for me to operate within that structure, I need to look for your sustainability. What is the sustainability? I want to look at whether you're a registered business or not. I want to see whether you pay tax, whether even if you don't pay tax, if you don't have tax, do you have the TIN number or PIN number? Then I see that which industry you're working with. Then I look at that, what is the resilience of your business? You know, some businesses are resilient and some businesses are not resilient because of the fact that you may not be responding the changes that is happening in the marketplace. I'll give an example of Kenya and one example of China, which is another glaring example of growing SMEs, growing their economy through SMEs. So in Kenya, I'm not a Kenyan, but I actually do try to look at what is happening inside detail of the economy. So there is one banana in Meru called tissue banana, as an example. So it was invented, and then farmers were busy, trying to grow and this banana, but they did not know, with this extraordinary growth, do I have the right market? Do I have the right channel to distribute my product? Do I let the customer know that it's a good product? So then it's a chaos, and then it ended up into a problem product. It's just picking up an example. Now look at China. I'm giving a COVID example. I'll come to COVID probably in a minute. During this pandemic, a person, Mr. Zhu, who was doing a furniture business. Now during COVID, this furniture business has gone down by 95%. He was only selling 5% of his furniture. But he was a tech-savvy guy. He was looking around what is happening in the world. He was, going to the various sites and all this. Then he realized, then during this pandemic, people are staying at home. There is a huge demand growing for the pets. People are buying dogs, cats, and all this. Then he immediately shifted and offered himself as a supplier of, the pet toys and all this. In less than 1 month time, he transformed his furniture business into, pet toy seller businessman, and he survived. So the reason for my example, or just a two example, there are hundreds and thousands of examples, is A, you got to be really putting yourself into the structure. B, you got to be agile in looking at what is changing in the marketplace and how you become relevant there. There are more opportunities than less in some segment if you are in the right segment. If you look at the fastest mover in last only 4 months, the big companies, these are all tech companies. These are Amazon, Google, and so on and so forth. All these companies who moved really, fastest growth trajectory, all tech companies. So my advice would be, you got to be aware of what is going on. Now for Standard Chartered Bank, we have the scorecard model. Kombo has already alluded to. Once a customer comes, we look at all these variables, and the scorecard will tell which attribute of yours are actually risk ranking to me. If you're, for example, I see that you are in a business of tech or a medical supply equipment, or you are a supply chain of some company, food company, for example, what I see there is resilience. So I give more score there. If I see that you have a business vintage, which actually allowed you to see through the process, I give more weight there. If I see that you have employee turnover less, you have a good resilience of your employee services, I'm giving an example. I'm not saying that this is the hard-coded rule. So we look at all your attributes for us to score you and then give you the loan. But if you're not in formal segment, if you're not registered, if you're not in tax bracket, I cannot do all this analysis for me to invite you. to my SME segment. It sounds a bit harsh, but that's the reality. Because at the end of the day, I'm here to protect depositors' money and then provide the money to the most needed segments where they can grow, the economy will grow, and then at the end of the day, it's a win-win situation for both our customers of depositors, the guys who are taking loans, and also for the bank. So I'll pause here for any question, or for my colleague Eva if she wants to add anything to that.
Thanks, Javed. Yeah, let me just chime in before you take in the questions. Good morning, everyone, and please allow me to have my video off. I'm trying to preserve my bandwidth. I have poor connectivity this morning, but thank you to Maxwell and Tim for inviting us for this. To the attendees, it's a privilege to be part of this session this morning. My name is Eva Ngigi, and I'm part of Standard Chartered. I work for a unit called SC Ventures. SC Ventures is the innovation unit of the bank. And ideally for us, it's all about technology and looking at it from the perspective of how do we use technology to solve for, real life problems. And closer to the topic today, earlier this year we embarked on a very aggressive project, and the project that we're looking to deploy later this year is one that seeks to address the challenges that SMEs face that inhibit or hinder their growth. Yeah, I think it was one of the panelists that mentioned that the three key challenges that have been identified to limit SME growth are access to finance, access to markets, and operational inefficiency. So what we're doing in that space is using technology. Yeah, and what we intend to do is to build a one-stop shop for SMEs to access the three services. Yeah, so let me stick to access to finance because that's really the topic of discussion for this workshop. What we've done is looked around and saying, one, technology prices or the cost of technology has come down. So how do we use then technology to make it easy for SMEs to access finance? My colleague Javed talked about scorecards. So think about a situation where, an SME, has data available on them, the registration that Javed talked about. They have their data records sitting with, whether it's the Revenue Authority, whether it's, the business registration services within eCitizen, whether it's, director records sitting within the Citizen Registry, commonly known as IPRS. With that available, onboarding, then stops being a 5-day process and becomes a 24-hour process. Yeah, so that means then an SME, who requires to establish a banking relationship with a bank can do that in a day. The second point is on the point of, then access to credit, because the prerequisite for accessing finance is, having been fully KYC'd. So when it then comes to credit, so the scorecard that Javed talked about then is leveraging, independent data sources. And then it ceases being that this SME who's providing, continuously, providing this information. Javed can do that on a real-time basis from a reliable source. So again, what that does is it makes it, one, it improves the speed of decision-making when it comes to credit. It also then gives the banks accuracy. Yeah, remember, and I think Javed mentioned this repeatedly, we have a responsibility to protecting depositor funds. With an accurate credit score, because your data source is reliable, then you're able to accurately decision for credit. So that's what we're doing, and what you will be seeing later this year is we're building a marketplace model, and a marketplace model, in very simple terms, means a platform where SMEs can remotely access banking services on a single platform. Yeah, so let me pause there, and then we can sort of blend in all the questions to me and Javed.
Okay, thank you, Evan. Thank you, Javed, for your very comprehensive, submission there and then presentation. Key takeaways, you talked about structure, you talked about the need to be agile and the issue of sustainability and resilience. I also picked out that it is important that you are able to sufficiently engage in what you're calling the tracks bracket, so that the business can be tracked, and that then does count for something when it comes to credit scoring. Now, a couple of questions from me, and I want to encourage our participants to keep sending in their questions in the Q&A tab as we keep moving along. Now, in practical terms, Javed, the first thing as an SME, and actually one of the reasons why SMEs don't end up approaching banks as much, is that the experience is, you go to a bank, you have a business, yes, there's a need, and that need is actually, by the time an SME is going to a bank, it is usually an urgency. So you need the money, and then you need it last week. And you go through the process, and one of the things that you realize is that you will be asked to provide some sort of collateral to support the borrowing. And that's where everything kind of breaks or falls apart. Because one, you don't have the collateral. Yes, you have a business, and you think the business can actually sustain the cash flows that would be required for you to pay back. But the posture, more often than not, is that, hey, as you've rightly said, you have to protect, your depositors' funds. So how do you bridge this chasm where there's a need? There are these SMEs that are lining up outside your door, but they may not have all the requirements that are needed to be able to access that finance. And I want to combine that with a question that has just come in from Kevin Kabu, who's saying that, who's asking, how do you deal with a registered company seeking financing, but directors have been flagged by the credit rating bureau? So over to you.
Yeah, and thank you very much. I think this is a very, very important question. You summarized it well. I will try to answer both. So number one is this popular thing is collateral. Honestly, in an economy like us, which are growing at the rate of 6.5%, apart from the COVID. Now, and our lifeline is economy, the SMEs. And we talked about, these are the small guys starting their business, probably have been in the business for 2-3 years. We are trying to get them into the, registration process and others. But, can I have a collateral today as I started my business? Answer probably for 90% of the cases, no. And that's why my colleague Kombo actually alluded to the fact that, the process of digital offering to the customers, we are not really looking at collateral. Of course, today, our traditional SME loans, the big loans, are backed by collateral because that reduces your risk. But as we are trying to be part of the economy, part of the growth trajectory of our customers, country, and the bank, we are looking at collateral-free lending. Of course, it will not be a very big lending, but it will not be less either. Something like, for example, for you as a startup, $10,000, $20,000, $30,000 may not be bad. But one thing I'll humbly request our most important audience here today, who are the SMEs, whether the money you have taken from your own source, your friends, your family members, or the bank, please utilize the fund wisely. Do not let 1 shilling go away outside your purview of the business. Because see, this will build yourself to go to the next. This will build your bureau score. As we said, for a scorecard, we only look at those behaviors. If I see that you are doing good, I'll move from 10,000 to 20, 20 to 50. One day you will become a big corporate. So one advice, and only advice, I would say that please behave wisely and you take care of every single penny, whether it is coming from your pocket, whether it is coming from somebody else, whether it is coming from bank. That's what will build you for the future. So yes, we are there, but I've added my advice with that. Now, the second question is if the director or the partner are listed in the bureau, I'll take the question back to you. If I'm the owner of a company, if I personally listed in my personal loan behavior, how do you expect me to behave good in my company? I mean, the likelihood, and we have the analysis, the guys who are individually not disciplined, they are not disciplined in their business. It's a cohesive thing, right? So yes, if we see that directors are listed, then we are reluctant to provide or extend loan to that company. And I think it's a logical, because we have to find ways to give the loan to the more and more good guys, not to the bad guys.
Okay.
Yeah.
Thank you for that. Another question would be, does StanChart offer specialization by sector? So if we take, for example, the agriculture sector, as you know, it's seasonal. And so, you would not treat credit that you're lending to, say, a farmer the same way you would treat, an FMCG, for example, because then, there are cycles around which cash flow then comes in, but they do need the cash in advance so that they're able to prepare planting, do whatever it is that they need to do until harvest. Is Standard Chartered sensitive to that? And do you have specialization around such sectors that then allow you to actually move into the borrower's side, so to speak, and then really be sensitive and understand their business?
Yeah, thanks. Again, a very good question. Our economy is largely driven by the agricultures, and for that matter, farmers are the lifeline. I'll be very honest. If you say that we have a specialized services, it is not yet. Are we not thinking about it? Answer is no, we are thinking about it. We have actually lending to the farmers in Eldoret, in Merus, and all these places where farming is really at their high. But is it really mass market? As of now, no. We are selective in funding to the farmers. But what we are trying to do, again, I'll go back to Kombo, through the digital process that will enable us actually to reach out to a lot more people. With the current structure, only branch banking here, we can't reach out to the mass market. We obviously have the plan. We are working with, CBK and National Treasury to see that, how we can be part of that most important part of the economy. But maybe we need to wait a few months or maybe Q1 as the things cloud gets over, we will find ourselves in a sweet spot to see that how we can support that segment.
All right.
Yeah.
Okay. Let me bring in Eva. Eva, you talked quite elaborately about what you're doing from a digital perspective and some of the platforms that you're creating. A question for you is, how is this process being driven? Is it largely from what you think the market needs as StanChart, or is it an outside-in process? And are you taking into account the needs of businesses, whether small or big, in creating this platform so that they're aligned to expectations from your customers, and then indeed then end up being friendly and meaningful to your customers?
Great question, Maxwell. Interestingly, let me even just start by saying, as banks, we have learned. Gone are the days where we would build and they would come. Yeah, so our approach to innovation has totally changed, and the key methodology we apply to innovation is human-centered design. And for us, everything starts with research. So I did mention that we started this process earlier in the year, and what took the larger part of that process was research. So we spent 2 months speaking to SMEs through in-depth interviews. We were able to reach out to SMEs across the key sectors of the economy. We were able to reach out to SMEs across the major cities. And we had long conversations, just trying to understand what are their challenges. Yeah, so we do not take it with an assumption of we know what the SME challenges are. Yeah, and now the step that now we're going into, because we have prototypes, is to begin testing the prototype with SMEs. So these are existing businesses who will be using the system, who will be using the platform. And if we don't do that, because ideally this is a self-serviced kind of approach, if we don't build it with the client at the center of it and going through that process, I mean, going through it with them every step of the way, we will not have any uptick. Yeah, so human-centered design thinking is what we have used to walk across this journey, and it will be an iterative process. Whatever feedback we collect is what we will use to improve the system. So short answer to your question, we did not do it the way we have traditionally done it. We did it differently, did it with SMEs. Through that process, we managed to build a community of SMEs who are willing to test with us, and that's the community that we are tapping into as we continue to build.
Okay, all right. And are you taking into account new technologies such as blockchain and if you could just share some of the innovations that we can look forward to?
Okay, so the key tenets of the platform are really, leveraging one, data. I talked about data and the role that we will play in terms of improving the delivery of service. New technologies obviously come into play. So artificial intelligence, machine learning, for us to, continuously harness the insights of the data that we're collecting and the intention is to use that technology to begin personalizing and providing more accurate services to SMEs. So it ceases to be, a mass market and begins to be an individual kind of approach. So we're using AI, machine learning in that regard. We're using, the normal messaging, because what we intend to do as a next phase, so the first phase, we're providing access to financial services. What we intend to do as a next phase is to enable the SMEs on the platform connect with each other. Yeah, so messaging and any other connectivity tools that come to mind, we'll use that. Separately, we're using blockchain to improve cross-border payments. Right now, overseas payments are a challenge. One, there is no visibility, they're costly. So we're using blockchain to address those challenges. And this technology then becomes or is intended to be embedded onto the platform. We're also using IoT. We're using IoT, Internet of Things, to help SMEs on the platform track their inventory. So inventory pilferage also has a bearing to performance of the facility. So for SMEs who so where there's a trial with the oil space, helping them track technology or track inventory from storage to the station. So that's then another use case for technology. So for us, it's not technology for the sake of technology. It's technology to address a specific need, and all this then aggregates or congregates on the platform.
Okay, fantastic. All right, thank you very much, Eva. Javed, I think we are coming to a close, and I just want to give you an opportunity to give some final remarks. And in doing that, there's a question that has come in from Malcolm Marega, who's asking, he basically cited the furniture business example of pivoting from furniture to pet toys. And so he's throwing the challenge back, and I think you've sort of addressed this, so you can just give a summary during your closing remarks. He's asking, has the bank changed the way it's evaluating SMEs, especially those that are seeking funds to develop new areas of business? So I know you've covered it, but I think in your closing remarks, maybe you can just rehash that as we close. You're on mute, Javed. Just unmute.
Sorry. Okay, no, thanks. So I was saying that in a closing remark, as SMEs, if I am the SME, I have two choices. Whether I go for a very, very expensive borrowing, and remain there as an unstructured area, not registered, not be in the tax bracket, and then keep on paying. I can tell you one thing, you cannot sustain. Let me tell you the number. As I told earlier, 4 out of 5 SMEs dies before their first birthday. So, my closing remarks would be structured, start with a passion, with a vision. And one of the things are, whatever you do, don't try to copy somebody else. The reason I gave the furniture example is the guy is agile. He himself thought that there is the opportunity. So look for which is the right business for you to do. Some other people are doing something, you just jump into it. You may not have the skill, you may not have the passion even to do it. So do that and come under the belt of the structuring. You will create a segment which will then people say that, oh, SME looks like a low risk business. It is both bank and the SMEs to really determine our future. And as I said, without SME, a country cannot grow. without SME, our bank cannot survive. So it is both of our responsibility to grow us together, not singly. So that would be my closing remark for the SMEs.
Thank you very much. Eva, any last words from you?
Just a quick summary. I think we have seen the benefits of technology, and I'd say, I mean, despite everything that's happening, technology does present an opportunity. And if there's two, segments that stand to benefit with the new technologies that we're seeing, is SMEs. And SMEs because they've previously been unbanked, underbanked, and the second segment is really the bottom of the pyramid, who don't have any form of identity. So the future is bright. We will see more coming out of Standard Chartered with regard to innovation within the SME space, and that's because we appreciate the opportunity that brings, and it takes away the challenges that banks have previously faced when serving the SME segment, whether the high cost to serve, the lack of information. So the future does look bright, and I do believe that we will through technology we will easily seamlessly navigate this current situation we are in.
Thank you. All right, so thank you very much. There's some 2 questions that have come through. I think those will be answered. You can answer them, Javid, Eva. You can see the 2 questions from Anthony Roberts and Branice Mayenga. Please do address them. We need to close this segment in the interest of time. I want to just thank you both, Javid and Eva, for sharing your insights and the work that you're doing at Stanchart to help support SMEs. I'm sure you keep getting questions, so please do monitor the Q&A tab, and you can just answer directly to the panel, to the participants. So with that,
thank you very much.
Thank you. I want to bring this segment to a close and invite Geoffrey Otieno. Geoffrey, if you're on, to talk to us about opportunity development. Over to you, Geoffrey. And I want to encourage participants to please keep sending your question, typing in your questions in the Q&A tab as we move along. And Geoffrey will be addressing your questions as he goes through his presentation. Thank you.
Yeah, thank you very much, Javed, Eva, and Max, for that very interesting session. I like the fact that Javed talked about resilience being key, because that's one of the things I'm going to talk about as well. But just a challenge to Javed and Eva is that you mentioned you have 10,000 SMEs, and maybe at a later point we might discuss with you. The group I'm going to talk about has come up with a solution that we call it a technological solution for SMEs by SMEs, and it will help you grow the SME numbers exponentially, while at the same time meeting what the bank needs, but meeting what the SMEs also need. So this can be discussed in a separate forum, and Maxwell can coordinate that, because he's very much aware of the tool that we've developed as SMEs. Now, in terms of opportunity development, when we look at what is happening around us, I'll first of all talk about how, as SMEs, people are coping with the current scenario, and then go into how do we then develop opportunities out of what we are experiencing. And a little bit of background is that when the pandemic started early this year, just a group of us came together and said, look, we need to help SMEs navigate the pandemic, and we need to do it in a way that does not cost them money, but they end up surviving and thriving, with the hope that they will also help other SMEs to survive and thrive. So 5 of us came together and started what we call the SME think tank. And all the discussions around the SME think tank were being done pro bono. At that point in time, the idea was to have it for just about 8 weeks. We thought the pandemic would be over within 8 weeks, wishful thinking. And therein was the beginning of something very great called the SME think tank. So in March this year, we started with just about 5 people. To date, we are roughly over 51 CEOs of SMEs who come together every week on Thursday, a day like today, at 10:30 and discuss how to help each other survive free of charge. There's no charge for joining that call. And I'll talk a little bit about, let me just go to the presentation. I hope you can see my presentation.
Yes, go ahead.
Okay, yeah, so that's the 50 SMEs today. We are in our 22nd week of calls. It was supposed to last 8 weeks, and we keep on growing as more people come in and say, look, we need help with this, we need help with that, how can we do this? And it's also given us so many solutions that we are now looking for banking partners to present the technological solution that we've developed. We've flipped it around. We are now going to banks and saying, this is the solution that will work for us. How can you plug in so that you get all these SMEs to be helped in terms of financing or whatever it is they need? And we've gotten the support of some of the major banks and insurance companies, and the tool seems to be taking off on a very good platform. So some of the members of that SME think tank are in this very meeting, in case you need any information, you can just type your question and we'll be able to answer that at a later point. The aim of starting it at that point in time was, like I said, enable SMEs navigate the pandemic, but support the government at that point in time to also combat the pandemic. From an SME point of view, it's not always receiving, we are also giving. And then share the experiences with fellow SMEs. And this cuts across. We are not looking at what's your turnover as an SME, no. We are looking at, are you an SME? And what do you need in terms of help? And then we help you structure. So that's just a brief about the origins of the group, because you'll be seeing a lot about SME think tank in my presentation as I go along. So how do you tap into opportunities and where do you get them? Most SMEs prefer to seek opportunities and work in certain ways to try and tap and then come out into the market. But the pandemic has taught us we need to think differently and work differently in order to thrive or in order to survive this particular pandemic. And I'm talking about, you had numbers at the beginning of the year that you probably said this year we are estimating we are going to do X amount by December 31st. And then by February 15th, you started seeing those numbers evaporating into thin air. And for some by June, it was now survival mode more than anything else. But then with the formula I'm about to discuss, we've seen it help fellow SMEs, especially the 51 I've talked about, still have hope in meeting the original numbers that they had set in the first place. So the number one thing is collaboration. At this particular point in time, collaboration is key. Look at where the opportunities are and how can you collaborate to tap into an opportunity. This requires an abundance mindset. If you believe there's enough for everyone, you will then come together with those of like mind and you'll find yourself doing bigger and bigger things together. In the SME think tank, which is what we're calling SME TT there, we've shared different opportunities from the time we started in March to date. And we even went ahead and printed a booklet of opportunities that we've shared. And we have about 62 opportunities in that booklet, but thereafter we've discussed several more. And all these, the booklet is handed over to members free of charge for them to discuss and see how they can tap into each and every opportunity that is within their sector or is of interest to them. But we encourage somebody to tap into an opportunity that suits what they are currently doing, or they can easily pivot to that particular opportunity so that then it makes business sense in the long run. And that has helped tremendously. There's also the issue of scoping the market. And for those of you who probably saw the article, there's an article we printed out even on LinkedIn about when the pandemic started, all airlines were grounded. And airlines worldwide were complaining about how they were losing income with planes on the ground, and there's no income coming, but they have huge costs, salaries to pay. And at that point in time, we looked at it from an opportunity standpoint. Let me take an airline like, let's say, KLM, with almost, now this is guessing, but probably they have about 4,000 pilots or more, or even 10,000 pilots. And we said, these are guys who, they are now at home, they are not flying. But I believe there are millions of young kids, primary school, high school, aviation clubs, and all over the world, and even adults who wish they could learn how to fly planes. So why not convert these pilots into trainers online for those who are interested in taking up piloting, and talk about piloting? And we did some mathematics and as SMEs again, and published some mathematics which was coming into hundreds of millions of dollars if they just charged $10 per person who attends the webinar on how to pilot planes. And that caught the attention of airlines far and wide, including airlines in Australia and the Middle East. And we realized as SMEs, we can also provide solutions to even multinationals and help them navigate the pandemic. Some of our own members have turned some of those opportunities into reality, and I'll give you a few examples a little bit later. So in summary, you look at what are the needs you've identified in the new market scenario. You just look around you, you'll see some needs that need to be met. And then, do you have a solution for the need you've identified? If you don't, who can you collaborate with to provide that solution in a beneficial manner? And then how do you intend to solve the identified needs, whether through collaboration or, and you have to really sit down and see how you'd solve that identified need. And then what resources do you require? This again takes you to people you can collaborate with. In the SME think tank, for instance, we have people who are in almost 50 sectors. So every time we need collaboration, it's just a WhatsApp discussion and somebody says, this is the opportunity. Whom can we collaborate with to tap into this opportunity? And one of the key values of the group is generosity. So you give out the opportunity, but there's also the element of being transparent in how the opportunity is tapped into. So people hold each other accountable very well. And when you do those four things, I've really summarized them. And Eva Ngige was talking about how they involved the SMEs. It involves a little bit more, and she probably understands this better, that to do all these four things, there's quite a lot, but due to time, I'm summarizing them as the four things you're seeing there. And then you go into making sure you have your business, but you also have these opportunities. So you're basically trying to make your business survive by creating opportunities that make it earn more revenue. That is what we are calling creating market competing strategies. You're creating things that help you compete in the market and sustain your business, but you're also creating things that create a market for you, so that you look into the future. And let me take the example of consultancy firms, for instance. Since beginning of March, consultants in most of the firms, including Enreal Limited, have not been able to fly outside the country, and yet we have clients outside the country who need assistance. And so we've quickly learned that you can actually run an entire strategy workshop and an entire design thinking workshop online, and we've had to adopt to that technology. I'm saying this because somebody had asked me a question earlier about SMEs and adopting technology. But we focus on building both market competing and market creating strategic moves. These go hand in hand. You don't build, at this moment, you don't focus on just competing in the market and forget about creating the next market. You have to do both at the same time as an SME. And this can be very strenuous if you don't collaborate. If you collaborate, it becomes very easy, and people help you with ideas, and they help you navigate very, very smoothly. Then you ensure that whatever you're creating also borrows from the core component, what you're known for. And please remember, if it's in technology, technology doesn't create markets on its own. Technology is an enabler that creates value that the markets want. It's the value the technology is creating that the market wants. It's not actually technology on its own. So don't focus too much on bringing the latest shiny object to the market, and then you realize that the users are rejecting it. It's because it's not adding value to their lives. So I promised you a few examples of opportunities that have been tapped into, and some of the people who tapped into the opportunities are in the very room today. A lot of online learning is taking place, but people don't know how to do this properly, because some of the organizations never even thought about doing online learning solutions for themselves. Consultancy firms, schools, universities, colleges, and all those. And so various SMEs are now building platforms that help all these institutions develop online learning solutions. And it's not only in, when we say online learning, people think of the schools now that are going on through Zoom and all the other means. But think of even the consultancy firm that is now deploying their strategy online, or deploying their design thinking online, or deploying transformation systems online. They've had to develop an online curriculum. Now, this is where, if you're a teacher and you are in the education, or you are a lecturer at a university and you've been doing this for quite a number of years, some of those consultancy firms need your skill sets in developing that online curriculum so that it can communicate with the end user, as opposed to face-to-face discussions of a consultant and a client. We also very early in February suggested to the government about setting up tents for emergency situations and isolation centers, so that schools are not used as isolation centers. And a few of the SMEs in our group looked at this very keenly and took it up, and they collaborated with those who are supplying other systems to make sure this becomes a reality. A case in point is a very industrious lady called Mkwama, who runs Mulika Africa Solar. And she took it up upon herself to equip the dispensaries in Makueni, in very remote areas of Makueni. She happened to have invited us to go for this trip. And before that, let me give you the story before that. Before that, she was purely in domestic solar. But then when the pandemic hit, the opportunity was discussed in the SME think tank, and she took it up, and the members supported her. We had one member who's in logistics, another member who's a finance guru, another member who's planning, and everybody came together and said, how can you do this? And they helped her provide solar equipment for Makueni County for several dispensaries. But this is where now we need Bernard, Kombo, and Javed to evaluate this SME on a different platform and help her, because she's having impact to the society that is critical at this particular moment. You can finance this particular project and ensure that it penetrates the entire country, because I'm sure everybody on this call who's Kenyan, you have a dispensary in your rural home that requires electricity. And when we visited the ones in Makueni, for instance, they have fridges that are being used for storage of vaccines, but there's no electricity. So they're using all sorts of ways to try and cool these vaccines, because if they get the heat, they get spoiled. And these are expensive vaccines that are needed in the rural areas. They have maternity wings that have no electricity. And so the doctors are saying we cannot provide childbirth services in the night, because we need to see and help the patients. So the women there are suffering because it forces you now to go to a maternity hospital during the day only, which is not possible because you don't know what time that baby is coming. And so this is what drove Mkwama into providing this solution. And so far, she's put together a proposal. Javed and Bernard, we can discuss this with you as SME think tank to see how that can be taken forward. In all that, I like what the panelists spoke about. Please ensure you conform to your regulatory environment. You're compliant, you have your tax compliance, you have your papers in order, you have your books, and you check whether what you're about to innovate, the rules act as an enabler or a constraint, and so see how to collaborate again and navigate. That's why for us as a SME think tank, what we've built as a technological solution for SMEs by SMEs is actually something that requires the collaboration of a bank and an insurance company for it to conform within the regulatory environment. This does not mean that we are trying to compete with the Kenya National Chamber of Commerce or KEPSA. No, we are also just providing a support platform where they can see all SMEs at all levels, how do they want to be assisted? And more importantly, what are the issues? And these are SMEs that are providing solutions to their own issues. So they're actually helping the country move forward. We've been invited already to the Office of the President to provide some of those solutions. And we did a presentation there just a couple of weeks ago on how SMEs can be helped to navigate this particular period. And they were very keen on the technological solution as well. And so they are looking at it from the point of view of this solution is going to provide both an economic and social impact, but help everyone navigate and provide growth, because at the end of the day, the government needs to help the businesses survive. Maxwell had mentioned to us that 40% of the GDP comes from this particular segment, the SMEs. And so that's why the government is taking it very seriously and ensuring that of the 14.9 million Kenyans who are employed in this particular sector have a way of surviving and a way of earning their livelihoods. And we've formed an advisory team that is now advising the government on some of the changes that are required in the SME sector as well. This is all within the 22 weeks that we've been in existence. You can imagine from helping each other to survive to being asked to comment around things to do with how do SMEs survive. And they've seen that the solution that we are giving can also assist in the credit guarantee scheme that was supposed to be launched. We gave our own comments about it. And we were able to show that the solution we have can ensure that the credit guarantee scheme benefits 1.5 million SMEs at the minimum, with criteria that is well laid out and ways of getting the money back and ways of collaborating with banks to make sure that they are not afraid of anything. There are no hiccups to the money that is being given to SMEs in that manner. We've also been able to advise on legal issues, because part of the team in the SME think tank, we have a few lawyers, and one of them is well known because she writes so many articles in the papers about the SME world and about legal aspects of SMEs. And we've been able to advise that currently in Kenya, we have the smaller segment of SMEs that people forget, the startups. And we were able to show that there's no legal definition of a startup in Kenya today. And we're able to indicate that we need to borrow from countries like India that have a well-defined legal definition of a startup, so that then you can help create jobs. Because yes, we are encouraging the youth to create jobs through startups, but we don't even have the startup in our own laws. We need to create that environment so that they are categorized. And even the categorization of the SMEs, if you look at what the banks are looking at as SMEs and what the government is looking at as SMEs and what the international NGOs are looking at SMEs, those are three different definitions of SMEs. And we've managed to convince most of these people we meet that SMEs need to be recategorized, and we've given them 5 categories of SMEs, and that's a totally different presentation. I can present it at a later date. It would take a little bit long to do that presentation. There are opportunities for even the panelists who talked in today's presentation. And so there's need to look at several areas. Let me take the bank, for instance. With the solutions coming from SMEs, there's a win-win situation for both the bank and the insurance companies. I talked about one of the solutions that we've built. And for you, the bank, what it means is rather than have, and if I'm not wrong, it was Kombo who said they have 10,000 SMEs. Rather than have 10,000 SMEs, you could have 100,000. And that would give you the float that you need. It would give you the interest that you need, and it would give you the transaction income that you need in order for the bank to grow. Because I'm sure the bank is also, everybody in the bank is also tasked on numbers, and your numbers, in my former experience in the corporate world, I was in the corporate world for about 23 years. The numbers never go down year to year. They always go up. So we need to look at how that can help. Insurance companies that we've talked to are very upbeat about the solution, and they are seeing the numbers that will grow. But the SMEs are more excited about it because they see help in a very meaningful way. And this can apply to invest in Africa as well, because you'll find most of the SMEs will go to invest in Africa and they'll want to join. But then immediately they click on your website, they'll see certain things, and then they'll come back to you and say, can this be, most of the membership fees, they'll come and say, I want to be a gold member, but I'm an SME at this category. How can we help each other? And I'm challenging Wangechi that we can discuss with Maxwell and see how we can help SMEs join IIA in an easier fashion that helps you grow your SME numbers, but also assists the SMEs to receive the much needed help that they need. Let me just pause there and see if there are any questions before I show you the group of men and women who have made that SME think tank deliver solutions that people are very excited about.
Yeah. Thanks, Geoffrey. I think that is great. There are a couple of questions that have come through, some maybe not directly related to opportunity development, but I think that you can touch on. I think you can see the questions, or do you want me to?
Yeah.
You can just...
And there's one question from Albert Mburu. What is your experience with strategic investors, equity partners, and others, e.g. VCs, PE firms worldwide working with SMEs? Thank you very much, Albert Mburu, for that question. Remember, all these people are in business to make money. So strategic investors, by the time you as an SME, you're going to a strategic investor, you need to ask yourself very fundamental questions. One, am I just looking for debt? Or do I want somebody to come into my business and own part of my business? That's the first question. And once you answer that question, then your experience can be long or short. If it's just debt, then Javed, Kombo, and Eva will quickly come to you and say, these are the terms, show us the following, and they'll help you out and you'll move on. If it's equity, it can be a long journey depending on how you are structured as an SME. If your books are not in order, or if you do not have your strategic plan that explains clearly where you're going, or your team is not adequate or well experienced, then that journey can be anywhere between 18 months to 36 months and back and forth. And sometimes it can be very, very frustrating. But then that's why we do what we do. We prepare you. We have a training that we call investor readiness, which we help SMEs prepare for investors. So we walk you through the journey and show you what to expect. And then we look at who are the investors across Africa who have invested in which industries and how much have they invested and what do they want. So you look at various term sheets for various investors, and then we help you make that decision. If this is the route you want to go, this is how you need to structure yourself. These are the things you need to put in place. Oliver Seno is asking, is the opportunity booklet that was developed available? Interested in that, please, if you could share it. Yes, it is available, and I've shared my email address on the chat. Just send me an email and we can send it to you in soft copy. Not a problem at all. Then Gurmeet is asking, I hope I pronounced that properly, or is it Gurmeet? What suggestions do they propose for bringing new existing products from either China or India? What are the needs for current consumers? Well, I'm not so sure I understand what exactly, when you say what suggestions do they propose, I'm wondering who it is, but when it comes to needs of consumers, that's sector specific. And you, the SME, need to understand what are the needs of, you need to have a pulse on your consumers to make sure you understand what are the needs. And sometimes you can see the future needs as well. This is what we call lead innovation. Lead user innovation. You are the user of the innovation, but at the same time, you know you're developing it ahead of its time. And so you can develop it and make it more meaningful to your organization. Then there's an anonymous attendee. I like that. How is the stakeholder mapping done to engage with the SME think tank? We are a business support organization for SMEs and women-owned businesses, and hearing of this for the first time. Fantastic. Thank you very much anonymous attendee. The SME think tank is a very young child. We just started in March this year as a result of the pandemic, and the idea was to help SMEs free of charge and help each other navigate. It is by SMEs for SMEs, and we are helping each other navigate. So it's now that people are putting very well laid out structures as to how that help to fellow SMEs will happen. And so please get in touch. We can introduce you to some of the officials of the SME think tank, so that then they can then invite you to one of our sessions and you get to see how we help each other. We actually have a session today starting at 10:30. Now, if I move on quickly to some of the SMEs in the SME think tank, these are men and women who have had
as you move
various
into
achievements.
as you start wrapping up, just a quick question for me.
Yes.
Most businesses, and not just SMEs, end up taking, when they're doing their planning, when they're doing their strategic plans, they tend to take, it's almost like you take a view of now or the past, and you use that to focus into the future. But I think the right approach should be take a future view and then work backwards and say, what do I need to do as a business to be able to take advantage of the trends that I'm seeing happening, that are most likely going to happen sometime in the future, but I need to prepare myself now so that I can be able to position myself appropriately for those opportunities to be able to appropriate those opportunities. And I think COVID has shown us that, because no one ever anticipated this situation. And so those who drag their feet when it comes to, for example, digitalization, have had to literally, under a lot of duress, then digitalize their businesses so that they can remain competitive in this environment. What would you say to, just from a planning perspective and how businesses can forecast trends and take that future back approach to be able to, prepare themselves for opportunity.
Yeah, thank you. Thank you very much, Maxwell. That's a very interesting question. And what you've described there is the challenge most SMEs face, because they do it the way you had explained earlier, where they take what they did in the past and then they just create numbers for the future based on historicals, and they call that a plan. If you do that, you're actually extrapolating, and that's not a strategic plan. That's just an extrapolated number game for the future, which might work, might not work, and chances are it might not work, especially the pandemic has taught us that. But the way to do it properly is you first of all do a lot of research work on first, what have you done in the past? Yes, that's important. You look at how you've done what you've done in the past and what were the results. But more importantly, what are the trends and what are the opportunities in the future? And that requires a lot of research work to do it properly. And this is where we can help SMEs as well to do it properly. Once you've taken all that information and you've synthesized it into meaningful information that can help drive the various business units within your business, then you need to sit down and say, okay, let me bring my leadership team and we craft this strategy together. Strategy is not a one-man show. The mistake SMEs make is the founder believes they know where the SME should go. So the entire strategy is in the founder's head. And so they are the ones who drive, and after a while they start colliding with their employees, or this person is not working properly. But remember that this person does not know what you're thinking in terms of the future of the business. So that's why when the research work and the analysis has been done and synthesized, then you bring it into a workshop environment with your team and then craft a meaningful strategy that will drive the business over the next couple of years, depending on the industry again. But remember, strategy is dynamic. It is not something you're going to develop a document, keep it in a drawer, and then say we have a strategy. No, things change every month. So you also have to reevaluate the progress along your strategy and make corrective actions as you go along. But the most important thing is not just having the strategy done, it's executing the strategy. People have beautiful strategy documents, but if it's not executed, it's useless. It's absolutely useless. So you also have to then craft an implementation plan that helps the SME look at, this is our strategy and this is how we are going to execute it. And in the execution plan, you derive KPIs for every single individual in the company, depending on what they want to achieve with their strategy. Let's say if it's a turnaround strategy is where the organization has been making losses and now they want to turn around and make some profit. The execution has to go all the way down to the lowest level in that organization, where everybody understands how their part contributes to the overall success of the company. Let me give you an example. You have to make even the company driver understand that when he puts the key in the ignition and starts driving that car, he has thought about how that contributes to the bottom line of the company. And one company we did that for successfully. The drivers would then go and have discussions with their supervisors and say, instead of taking this parcel, which is just an A4 envelope from industrial area all the way to town by company car, why don't you allow me to jump on a boda and I'll pay 100 shillings and still get the envelope in town. And then I come back, and then if they're bulky objects, that's when I'll use the company car. These are the drivers now holding discussions with their supervisors. And so implementation is very, very key. Now, when I get to the achievements, I'm trying to be conscious of Maxwell's time.
Yeah, time, we are pressed for time. So if you
yes. We have a very good gender balance in the SME think tank. We've had 22 week sessions, today being the 22nd. Over 50 companies. We are in various counties. We have people in Mombasa, we have people in Nairobi, and the farthest participant is a lady who's in relocation services, and she runs a great relocation service for expatriates, and she's based out of Paris, France. We have a medical doctor who's running a hospital in Lagos, Nigeria, but she's Kenyan. These are all Kenyans. And then we've shared, right now, I can see there are over 72 opportunities, and we are in about 50 sectors. So if I show you some of the companies in the SME think tank, those are the logos of companies that are in the SME think tank, and they've been able to generate opportunities for each other. People have been able to generate opportunities for each other and help each other navigate the pandemic with some very great success stories in there. If we had more time, I would probably have given you more success stories about some of those companies that are highlighted there, including the likes of Tucha Wholesalers in Nairobi West, who are contributing to even the society in a much greater way. And that's it from me. Thank you very much. I look forward to the questions and any suggestions.
Okay, thank you. Thank you so much for that, Geoffrey. I think that has been very illuminating. And I think the work that the SME think tank is doing is something that is certainly going to be revolutionary in this segment. So with that, I want to take us to the final part, or the third part of today's workshop. And this will be B-Lab, taking us through governance and structure for impact, and sharing how their impact assessment tool can help your businesses gain proper governance structures. So I will hand over to Ngwing, who will introduce the rest of the team and take it on from here. Ngwing.
Thank you, Maxwell, and thank you everyone for staying in touch this morning. We've had a long morning so far. It's been 2 hours, so we really appreciate your patience and your participation so far. I'd like to go ahead and share my screen so that we can begin the presentation. So the B-Lab team that will be joining us today, it's myself, and then we have Grace Wachori and Lucy Wigai and Victoria, who will be taking us through the later sessions. So to begin, I would like to start by going through our presentation on the history of B-Lab and the work that we are doing currently and our vision for the future. B-Lab supports a movement of global leaders and companies that use their business as a force for good. We believe in a better way of doing business. To help you understand our vision, let's set the scene. So in the 20th century, we witnessed capitalism that was extractive, exclusive, and focused solely on the maximization of shareholder profit. And we are suffering the effects of that today. As we can see, the inequalities gaps keep increasing. Our environment keeps suffering from lack of care. And so what we are proposing and what we are seeing right now is a shift of businesses whose leadership is thinking about stakeholder capitalism as an alternative to shareholder capitalism. In this light, the businesses are considering how they can do their business, allowing the society to be regenerative and inclusive, and while they think about all the stakeholders. And for stakeholders here, we use that phrase to mean our workers, the community in which we operate, the environment in which we operate, as well as our supply chain. Maxwell mentioned some statistics earlier this morning. 98% of Kenyan businesses believe that business should take a stand and a role in addressing societal issues. As he mentioned, 40% of the GDP in Kenya is contributed by SMEs, meaning that SMEs can have more impact than they are currently having in terms of our societal pressures that we see. SMEs also provide 30% of the jobs in Kenya. And of the informal sector, which has over 800,000 jobs, 80% of those are contributed by SMEs. So if you think about the number of people that SMEs are able to reach and the number of communities that they are able to impact, you can see that making one decision to consider the impact of your business can make a big and significant change to the society in which we are currently living. The market itself is demanding change. We are seeing businesses and individuals looking, even investors, looking for businesses that have a purpose because they want to invest in purpose-filled businesses. They look at social enterprises that have an impact on the members of our society that are deemed to be at the bottom of the pyramid. So in that light, when you look at the last 20 years of business, you could recognize certain logos like the Fair Trade Alliance, the Rainforest Alliance, Energy Star, and all these are the foundation upon which B-Lab developed the idea of having good companies rather than focusing on good products. And you may ask why. That's because when you focus only on the products which are the output of the business, you forget the workers in the business who are really the driving force of the growth of the business. And also you think about even the directors of the company, you think about your supply chain, you can see that all these stakeholders are essential to your survival. And so B-Lab set about to redefine success in business. B-Lab is a non-profit organization that is behind the B Corp certification. B-Lab developed the standards. It verifies the company's performance against the standards. And in some markets which are more developed than our Kenya market. In Kenya, we've only been here for 3 years, but we already have over 42 certified B Corps in Kenya and South Africa. So we advance benefit corporation legislation in more mature markets, which basically means that we advocate to governments to create a category of business called benefit corp. So you're not a non-for-profit because your business is out to make a profit, but you're recognized from the onset in your legal documents that you consider impact while you are doing your normal business. And so our vision is of an inclusive, equitable, and regenerative economic system for all people and the planet. So what does our timeline look like? At the beginning, we set out to develop the market infrastructure. And we considered that the first step would be to build a community of thousands of credible leaders. And these leaders are leading companies, which is why we refer to them as certified B corporations. The idea here is that if a leading business gets certified and does well, then within their networks, they can influence other businesses and influence their peers in different sectors to follow suit. The second step was to create the tools to allow millions of other businesses to follow. And these tools that we have created so far, the first one is the B Impact Assessment tool, which we will be taking you through in the later part of this session. The second one is called the SDG Action Manager tool, which we recently launched in January in collaboration with the UN Global Compact. And that tool incorporates the 10 principles of the UN Global Compact with the B Impact Assessment test. And this one is specifically to measure an organization's progress towards the SDGs. Step 3 is to inspire billions of consumers and workers and investors and others to support the businesses who are a force for good. And what does that mean? That means we encourage investors not only to put money in businesses where they think they will get a profit, but to put money in businesses that are certified B Corps, meaning that a third party has verified that indeed they are having an impact. Secondly, we encourage consumers, when faced with the option, to choose businesses who have taken this stance, instead of just buying products from any organization or acquiring services from any organization. Choose ones who have decided to run their business differently. And at the end of it all, we hope to achieve a shared and durable prosperity for all. So when we started in 2007, we had less than 200 certified B Corps. At the moment, globally, we have over 3,500 certified B corporations in 160 industries in 75 countries, all with one unifying goal: to accelerate a global culture shift so that we redefine success in business and build a more inclusive and sustainable economy. So who are our global B Corps? You can recognize some of these brands like Ben & Jerry's, Patagonia, Trados Bank, Danone, Natura, and these are really the leaders who inspire others to follow suit, because some may think that if you are big enough and you're making enough money, you don't need to do your business in a different way. I'll take Danone, for example. Here on the continent, we have benefited from Danone's stance to become a certified B Corp because their subsidiaries who are on the continent are being required and encouraged to do the same. So as you can see, the theory that we had about credible leaders being at the forefront and encouraging others to follow suit is working. Here in East and Southern Africa, which are the regions that we cover intentionally, the rest of Africa, we haven't expanded that far, but we cover them opportunistically. So you may recognize some brands like Vava Coffee, IQ Business in South Africa, Daprowim, and Strauss Energy. You may be asking yourself as an SME, what is the value of certification for you? I had mentioned earlier about joining a global community of leaders. When you join or become a certified B corporation, you have access to other certified B Corps around the world. So it produces an opportunity for networking. During the past few months, we have seen our local B Corp, Vava Coffee, enter into an agreement, a collaboration with other coffee suppliers in Asia. And this would not have happened if she was not part of the community. The second thing that you can think about, and these are just some of the examples that we have heard, some of the reasons we have heard from our local B Corps about why they certified. But I'd like to reiterate that the journey is different for each company. So different leaders might have different reasons. And so these reasons that I'm listing here are not exclusive. The second reason is to benchmark and improve upon your impact. I had mentioned our B impact assessment tool earlier. This tool will allow you to take your pulse today to say, what impact is my business having, if any? What governance structures have I put in place that will allow my business to thrive and to be here for the long run? The impact assessment tool allows you to do that. Also, as you go through the tool, you will have sections where you can set goals for yourself, and you will have sections where you can see that you need to improve. So the tool will help you do all of this, and even give you ideas about things that might be helpful to your business that you may not have thought about. The other reason is to differentiate yourself from the competitors. The Certified B Corporation brand is globally recognized. If you're an exporter, for example, and you have that logo on your products, you stand out. Even if you're here locally and you are thinking about partnerships, or you're thinking about seeking for funding, your Certified B Corp logo on your business card, on your website, on your products, it differentiates you from others in the market. Another reason is just to have the objective third-party validation. I had mentioned earlier in the panel discussion session that you may say that you are a social enterprise, or you may say that your business is having impact, but you telling the story and tooting your own horn can only be as credible. Having a third-party objective organization make that call for you makes it that much more credible. Another thing that we have seen that is a good outcome for Certified B corporations is to attract and engage talent. And by this, we mean your staff and the workers that you employ. We have found that 65% of our companies that have certified have reported that their staff is more engaged because they know the purpose of the company and they know the vision and they believe in it and they have bought into it. So to them, they are building more than a company. And as they've bought into your vision, they are more likely to take part and participate into giving you ideas on how to improve, and giving you ideas on how to grow the business. They are also more likely to stay with you for longer because they have bought into your impact. We are also seeing a lot of millennials being purposeful about looking for Certified B corporations to work for, because the brand itself gives them a trust about the type of company that they are joining to work with. The other thing is that as a Certified B corporation, you protect your mission. One of the catalysts for the founders of B Lab to start with this vision is that they owned a company which was bought out, and immediately the company was sold. The buyer laid off over 300 employees and basically did away with everything that they had put in place to protect their purpose. So when you become a Certified B corporation, you embed in your legal structures the values that you espouse, so that in the event that you merge or you get bought out or you change leadership, your mission is protected in your legal structures, so that even if you are no longer a day-to-day part of the business, you can rest assured that whatever you envisioned and whatever you started out as a plan or a purpose that you wanted to achieve with your business will meet, the goals that you set for it. And lastly, I mentioned briefly earlier about raising capital. We are seeing a lot of investors wanting to invest in impact-driven businesses. The certified B Corporation logo shows that your company has been verified. So that extra hurdle of trying to prove to a potential investor that they should put money in your business will already have been crossed by the time you become a certified B Corporation. Having discussed the history and the work that we do and the benefits of becoming a B Corp, I'd like to pass it over to Grace now so that she can take us through the tools of B Lab and especially the governance.
Thank you, Ngwing Kimani. My name is Grace Oshori. I am the Community and Engagement Lead here at B Lab East Africa, and I will be taking you through our tooling through the B Impact Assessment tool and how we can use this tool to leverage on our businesses to measure impact and continue the positive impact within organizations. So one of the tools we have is the SDG Action Manager. This tool was developed in collaboration with the UN Global Compact. It brings together the big impact assessment, the 10 principles of the UNGC, and the Sustainable Development Goals to enable a meaningful action for yourself to be able to self-assess your organization, track your progress, and watch that over time. The next tool we have is a big impact assessment tool. This is a free confidential platform. It is found online. This one helps you to measure how you are creating positive impact within your 5 stakeholders. This will be the workers, the community, the customers, and the environment. Now, today we are going to be focusing on the impact measurement tool. This is a big impact measurement tool. And in our quest to be able to help organizations to measure and manage their impact, B Lab has been able to work with different partners to help them measure that impact with as much rigor as they do their profits. As you can see here, we've been able to work with investors, with supply chain managers, with banks, with multinationals, incubators, and accelerators, totaling to more than 70,000 users of the BIA, with also partnerships that exceed 100 of them. Now, how do you get to becoming a certified B Corporation? The roadmap to there goes through, you have to go through the B Impact Assessment, which is a BIA. You have to understand the legal requirement and pathway. This helps you to change your memorandum and articles of association that you'll not only consider your shareholding, but you also consider your stakeholders. You also need to get buy-in from your senior management and your board members. When this has been done, then you are able to submit your BIA for the verification process. To do this, you must have a score of 80 points and above out of 200. Now, if you don't get to the 80-point score, that's okay. We are able to work with you to improve your score to the 80 mark, where you're able to submit it for the verification process. At the same time, we'll need you to actually go ahead and change those memorandum and articles of association to reflect that you will only be going forward considering the stakeholders and not just the shareholders. After that has been done and your score has been verified, maintained at 80 points and above, then you are finally eligible to be a certified B Corporation. But to do that, you have to sign the B Corp agreement, the Declaration of Interdependence, and pay your annual fees. The B Corp certification requirements are 3 key areas. We look at the first requirement, which is the social and environmental performance, and this is done through the B Impact Assessment, a score of 80 and above, like I said. Secondly, accountability by adopting the legal framework that will consider all stakeholders. And thirdly, the transparency. Once you've done this BIA and your score has been verified, this score is published on the B Corp directory, which is outward facing for everyone to see and therefore have transparency. Now, like I said, we'll be focusing on the B Impact Assessment today, and this is a tool that will help you as SMEs here to be able to measure the impact that you're having on a day-to-day basis, not doing anything extra within your organization, but as you consider your business every day, what are the things that you could put in place, what are the things that you're already doing that are causing impact? Now, we've talked about measuring and managing. Let's talk about what other things that the BIA does. See, it gives you a scorecard where you're able to see yourself, where you rank, and rate yourself among your peers. It will show you where you rank among all the businesses that have taken the BIA since inception. This is over 70,000 companies where you rank. You're also going to give you educational tools to support your companies on what you could do to create impact, and even facilitate that discussion with your team members on what you could do to have impact. It helps you set goals. There are tools within the BIA itself that will show you the questions that you fell below par and how to set goals on them, how to work on them, track your progress over time until you get to where you need to do, and thus give you an improvement report. Like I said, you're able to track where you are and see where you fall within the wider determinants. Now, we need to understand the structure of the BIA tool itself for you to be able to meaningfully measure your impact. There are 3 track determinant questions, and these questions are super imperative because these questions are the ones that help you, give you the right questions to be able to assess your impact successfully. One of them, it will look at the market you're in. The questions on there are developed markets and emerging markets. For the Kenyan companies would definitely fall under emerging markets. Now for the sector, you'll have different sectors: services with minor environmental footprint, services with major environmental footprint, manufacturing, wholesale, agricultural growers. Now the difference between services with minor environmental footprint and services with major environmental footprint is you might be a service industry, in the service industry, but you have machinery, you have buildings and stuff like that, that will require you to track your footprint. But if you don't have that, that will be minor environmental footprint. These are very essential. When you look at the size, it will be the size of your workers. If you're just founders that are working, then that means you do not have any workers, and therefore will not ask you questions on your workers. These track determinant questions help you be on the right track to be asked the right questions to successfully and meaningfully measure your impact. The other thing about the structure of the BIA that you need to be keen about is operational impact versus an impact business model. This is just asking, is there something specific about your company design that goes above and beyond to create impact? So let's understand what the difference is here. Operational impact will be the things you do on a day-to-day basis versus your company design. Now, you will say that you have impact, and do you make it positive? Those will be the practices you do daily, but is there something specific about your company design that goes above and beyond, like I said before? Operational impact would be doing these things impactfully, whereas impact business models would be doing impactful things. Now, when you look at operational practices, these are very common. We see them all the time. I know Standard Chartered Bank is very good at this at their headquarter offices, where they have water, they have energy, saving energy lights in the building and the like. This is common among our businesses. What is rare is the impact business models. Here we have an example of how that would look like. When it comes to hiring, operational impact would be saying that I have a diverse workforce. But an impact business model will be having a workforce development program that targets individuals with barriers to employment. See how that company design, you are from the onset giving programs that target individuals with barriers to employment and developing them at the same time. Now, I want us to switch gears a little bit. And because we're here to figure out how we can create impact for ourselves or measure impact for organization, there's some questions I want to pose to you that you need to churn. And as we go on, if you have any questions, remember to put them on the chat box, raise your hand. We'll be asking you to ask them later, a bit later in the session. These questions will help you to think about the things that you need to put in place, especially for governance and structure within your organization. And then I'll take you through how the BIA helps you to assess this. Now, within your governance, do you have a mission for your company? Is it written down? Is it public facing? What are some of the practices and policies that you have in place to promote ethical decision-making and prevent corruption within your organization? Do you comply to financial reporting standards? Do you make this publicly available? Now, when it comes to the workers section, some of the questions I want you to think about are, do you pay your workers a minimum wage or a living wage? Do you hire individuals from underdeserved groups? And which are these groups that you have, if at all you do? Do you have an employee's handbook? Is this handbook available to your workers? Some of the questions to think about. When you think about the community as a stakeholder in your organization, do you have a supplier's code of ethics? Do you have minimum requirements for suppliers or vendors that you deal with? Do you know if your suppliers are aligned with your mission and your vision? Even, do you have a diverse pool of suppliers? When you look at your suppliers, how diverse are they? As you think about these questions and raise any question you have on the tab, I'm going to take you now what the actual tool covers to answer these questions and how it's going to help you assess your own impact, rather positive impact. Under the governance structure, these are the 5 key stakeholder areas that the BI covers: the governance, workers, the community, environment, and customers. What you see in blue, the questions that are targeted for your operational impact. What you see in red will be questions that are targeted to your impact business model. So today we are going to be concentrating on those first 3 key segments: the workers, the governance, and the community impact areas. Now, the governance impact area will help you evaluate your company's overall mission, ethics, accountability, and transparency. It will help you measure whether your company has adopted a social or environmental mission and how you as a business engage your employees, your board members, and the community to achieve that mission. This section will also help you assess your company's access to financial information, the opportunities that are available to your customers to provide feedback to you, and the diversity of your company's governing bodies. The workers' impact area will help you evaluate your company's contribution to your employees' financial, physical, professional, and social well-being, also on their job quality. The community impact area will help you evaluate your company's engagement with and impact that you have with the communities in which you operate, the communities that you hire from, and the communities that you source from. This will go deeply into checking on the supply chain management and the diversity and equity and inclusion of your organization, how you engage civically with your community service, and charitable giving. In Kenya, one of the big things that we do is at the end of every year as businesses, we do CSR. And when you do CSR, we feel, right, we are contributing to our communities. But when you look at actually assessing your impact, that is a very small percentage of the actual impact you could be having if you change it from being operational impact, something that you do ad hoc, something that you do when you want to, than if you made it a part of your company design. So we are going to talk about how to change, or rather direct the energies that we have in our organizations and ingrain them into the DNA of our businesses, and how we can leverage on this tool, the BIA, to have this done. So I'm going to go back to the questions that we started with. And just, I hope you're asking questions, and just let's talk and hear what you have done for your organization. So the first question was, do you have a mission for your company? As Mr. Geoffrey alluded to, a lot of us here may have this in place in our heads, right? But is it written down? And if it's written down, is it just on the website? Do we have it in the hallways in our buildings? Does the least person in our organization know what our mission is? The cleaning lady, the watchman, do they know what that mission looks like? When you talk about practices and policies that we have in place to promote ethical decision making, do we have policies like the whistleblower policy? Do we have a code of conduct? Do we have any internal financial controls? Do we ever conduct an ethical risk management for organization? When you talk about, do you comply to financial reporting standards? Which standards do you follow? Do you follow the local standards in the country, or do you follow international standards? And when you do this, do you make this publicly available? When you go to the workers section and you say, do you pay a minimum wage or a living wage? Now, a minimum wage would be what is considered by the law of the land. And a living wage would be what you would consider a good wage to help you live a good life. So which one do you go by in your organization? Do you hire individuals from undeserved groups, For example, disabled people, refugees? Do you promote equality, inclusivity, and diversification within the organization? When you talk about an employee's handbook, is it available? Is it handy? Do your workers know what number of leave days they're entitled to? What number of sick days they're entitled to? What is the procedure if you were to leave your organization? What do they need to do? Do they know this, first of all? Is this handy? Is this written down? Is it public facing? Is it available? When you talk about the community that you engage with, do you have minimum requirements for your suppliers and vendors? You know, when you want to participate together in changing the world and making the world a better place and creating impact in your community, do you align yourself with suppliers that you share the same vision with? Do you have a code of conduct? And what happens when the supplier does not hold on up to that code of conduct? When you talk about a diverse pool of suppliers, do you have a gender balance? Are you employing from underdeserved groups? The biggest thing in Kenya, do we have a tribal balance? If I'm Kikuyu, I'm likely to have all my suppliers as Kikuyus. If I'm a lady, I'm likely to have all my suppliers as a lady. But are you targeting and specifically and deliberately, consciously having that to enable diversification within your organization? Now, we have big corps that we have dealt with, and they tell us that this is not easy to do, and you have to target specifically and consciously to do this. COVID-19 has come and has exposed, right, the good things that we are doing within our organization or where we are having loopholes. So how can we use this time to be able to amend a few things in our organizations or improve on the things that we've seen we are doing well, to be able to go forward and actually create positive impact within our stakeholders? When you talk about CSR, and this is huge, especially now with COVID-19, how do we help our communities to be able to grow, to be able to be sustainable and resilient with COVID-19? How could you change your company design to ensure that a pandemic does not have to come for you to be able to commit and help the community that you live in? When you put these structures in place, then you will be able to have a standing organization that will transit beyond time. Does it come fast? No, it takes a while, but it will survive for much longer time. Now I want to pass this on to Victoria Gathogo, my colleague, who will take us through any questions that have come up and see on the other side. Thank you, Victoria. Before Victoria takes over, one of the things I would like to call us to action is kindly go on and complete the B impact assessment to educate yourself on the positive impact your business is having holistically in consideration to your stakeholders. It will enlighten you quite a bit on the things you're doing well, on things you need to improve on the things that you're doing great and probably you want to solidify as part of your company design. Then after you've done this, go ahead and use those results to have a discussion with your team members. Put your ideas together, buy that, sell that vision, sell that strategy to your team members, and decide together what you will do to ensure that you're having positive impact, both on the operational impact and on the impact business models within your organization. Victoria?
Thanks, Grace. Thanks, Ngwing. So just together with Ngwing and Grace, and especially on the technical issues of the process on certification or anything of that, we just want to open it up to a Q&A. Of course, the chat box is also open, the Q&A box is also open, so feel free to reach out with any questions that you have. I'll have Grace put in her contacts in the chat box for anyone who would want that, a link to the B Impact Assessment, to the SDG Action Manager, and then just take your questions from here. I know it's also been a long morning. So, I mean, the contacts are there, so you can feel free to reach out to us. Maxwell, I actually don't know how you're able to do such a good job and keep everyone's concentration for 2.5, 3 hours. But
yeah, no, thank you, Ngwing, thank you, Grace, thank you, Victoria, for this session. I think I have a question. Probably, those who may not be speaking out are probably asking, because most organizations will not necessarily be ready for this, so they definitely will have gaps in their readiness when it comes to your impact assessment. What sort of support do you or would you be able to provide to organizations, especially where now the gaps have been identified? Is there any kind of support that you provide to help them bridge those gaps and get them to be certified appropriately?
Yeah, thanks, Maxwell, for the question. And that's a very good question, of course, for SMEs and entrepreneurs who are on this call who, of course, are stretched. So one of the things is that the BIA itself is, first of all, even before you think about certification, an educational tool. I think for most organizations for over the period, impact has been seen as creation of jobs and working with women and youth. And, so it's just opening up, first of all, that educational element of do the assessment and then see where do you stand. And then after that, yes. So we have people on the team who, like a consultant at a fee, can be able to walk you through the process, provide improvement strategies, give you links to experts, definitely on different areas. Of course, not everybody is aligned. There are, of course, people who maybe supply chain impact, transparency in the supply chain and that economic impact of the supply chain is what they feel where they want to have their impact. For others, it's actually on governance, for example. So they're really thinking through how can they have that long-term mission alignment and change of their, maybe memorandum of articles or just putting in a board. And sometimes some of these things are very small things. Do you have an employee handbook? Do you have a code of ethics? Do you have a supplier questionnaire? So once we go through the whole assessment, yes, we have people on the team who can support you in that. And even as Ngwing was mentioning, we do have workshops which we hold and now being held virtually, in which we have small groups of SMEs come together. And then now that peer-to-peer learning together with someone on the team and some experts, which also provides some great feedback.
So that's great. And I think this is really important for those businesses that are on the call. The team from Stanchart talked about structure and being able to, have proper processes within your organization that they look at in terms of being able to qualify and score you for credit. So I think a tool like this can really help businesses identify where those gaps are and how to close those gaps. And then I think hopefully then make them much more attractive when it comes to either getting, support in terms of credit or even investment into their businesses. So,
sorry, Maxwell, I think someone has asked a question about, that's Albert Mburu, about your initial review and certification fees and annual renewal fees. So the certification fees are, and Grace will put a link to where that you can get that on the website, but also just to say it here that the certification fees are based on your revenue, and they're revenue based because we don't want to, the same cannot be for one person who has 20 employees and another manufacturer who has 1,000 employees. So it's revenue stacked, and we start from about from $0 to $50,000 more or less is $300, and then moving like that. So $50,000 to $150,000, it's $600. So Grace will put that in, and that is on an annual fee. We don't have, we only have an initial review fee of $100, which is just to support you through that certification process, and also that is recovered back in your annual fee. So if you are going to pay 3,000 or 2,000 fees, you pay the 100, and that will be deducted when you're paying your final fees.
All right. Okay. Thank you for that. So ladies, thank you very much. Thank you, Grace. Thank you, Victoria. Thank you, Ngwing, for that great presentation. I think as we are coming to the end of our workshop this morning, I want to just ask Eva to put up a poll. There's a poll that we want you to take as we come to the close. So just 2 questions. If you could please fill in the poll. 2 simple questions. If you could give us your feedback, that would be great. Yeah, let's keep going. Yeah, there's 50% who have voted. If we could keep going. I'd like us to get to at least 60%. The poll is on your screen. Just two simple questions. We want you to rate the workshop in terms of usefulness to you and which sessions you found most useful. This will really help us in shaping how we structure this next time. Okay, I think ever we can close it at 56%. Yeah, so as you can see, 88% found the workshop to be very useful. 12% find it useful. And yeah, it's great that nobody thought this was a waste of their time. Then of the sessions, I think the finance, opportunity development, I think all have scored good ratings, including the governance and structure for impact. So that's the feedback. And I want at this juncture to just really thank our speakers, beginning with the panelists and the organizations for partnering with us, Invest in Africa. Thank you very much, Wangechi, for being on the panel today and for sharing your insights. Thank you very much to the team from B-Lab, led by Ngwing, you know, and supported by Grace and Victoria for all your insights this morning and for sharing your knowledge. Thank you to the team from StanChat for sharing the various tools and processes and options that they are available to support SMEs from a credit perspective. Thank you, Geoffrey, and the team from Enreal. I know Geoffrey has dropped off due to another meeting, but I think his presentation and his remarks were very useful as well. Thank you to the Kenya National Chamber of Commerce and Industry, who have supported us in the background by amplifying this to the SMEs in their membership. And I really want to just thank everybody, each and every one of you, for attending this webinar. It's been a long session. And as I said at the beginning, this is the start of what we want to build into a program that we really want to see how we can contribute to helping SMEs grow. And AmCham is there as you know, a private sector body that puts together forums such as this, but more importantly, also, we want to be able to help you leverage opportunities in the US market as well as you know, as we move along. And you're all aware of the free trade agreement that is now being negotiated between Kenya and the US. And one of the possibilities is the market access that will be open to Kenyan businesses, whether SME or bigger. And AmCham has a critical role to play as that, you know, that honest interlocutor, be able to help you access market opportunities in the US, be able to help you gain the right linkages and partners in the US so that you're able to grow your businesses. And of course, we work with partners locally to ensure that, you know, we're providing a 360 service that is of benefit to SMEs who are so critical for our growth as a country. And so with that, again, thank you so much, Bernard, thank you, Ngwing, thank you, Javed, thank you, Victoria, Grace, thank you, Wangechi. I think I've mentioned everybody. Thank you, Geoffrey. Thank you, Eva, for all your insight and your input during this workshop. With that, I want to bring the workshop to a close, and I wish everybody a wonderful day, and please do stay safe. Thank you.